Hi, and welcome! In this video, we will discuss about the single entry system. And now, let's get started.
Single entry system. A business entity can record its monetary transactions either on single entry system or double entry system of bookkeeping. Single entry system is the oldest method of maintaining financial records in which an entry is made for every financial transaction. It is centered on the results of a business that are reported in the income statement. The core information tracked in a single entry system is cash disbursements and cash receipts. Asset and liability records are usually not tracked in a single entry system. These items must be tracked separately. The primary form of record keeping in a single entry system is the cash book, which is essentially an expanded form of a check register, with columns in which to record the particular sources and uses of cash, and room at the top and bottom of each page in which to show beginning and ending balances. Single entry system is primarily used by a sole proprietorship and partnership firms. This system does not require high knowledge and expertise for entering transactions. Journals, ledgers, and trial balance are not prepared for it. However, the income statement is prepared to know the profit or loss of the business. Due to some drawbacks like one-sided entry, reconciliation of accounts is not possible. The possibility of frauds and errors is maximum. That is why it does not coincide with generally accepted accounting principles or GAAP. Moreover, accounting records maintained under this system are not suitable for tax purposes. Under the single entry system of bookkeeping, the cash book and personal accounts of creditors and debtors are maintained. A single entry system records the date, description, the value of the transaction, whether it's an income or expense, and the balance. On the other hand, double entry system is the scientific method of keeping financial records developed by Luca Pacioli in 1494. This system is based on the principle of duality. Every transaction has a dual aspect. Each transaction affects two accounts at the same time, in which one account is debited while the other account is credited. Due to twofold effect, the system possesses completeness, accuracy, as well as it matches with the generally accepted accounting principles or GAAP. A complete procedure is there for recording every transaction. The procedure starts from source documents, followed by the journal, ledger, trial balance, then at the end financial statements are prepared. The double entry bookkeeping system works on the basic accounting equation, which is as follows. Assets is equal to liabilities plus owner's equity, wherein assets are the money that the company owns. Liabilities are anything that the business owes. Owner's equity are the owner's investment in the company. Income are the money that the business earns by selling its products. Expense are the money that the company spends to run the business. You should always remember that each side of the equation must be balanced out. This is how we arrive at the term balancing the books. A small example will help you understand this equation. Example: assume you are recording debit and credit entries for the transactions that take place in a week using double entry bookkeeping. Transaction number 1. The starting balance for the week is $5,000. In 1 week, you pay your rent $1,000. The entry here is you debit rent for $1,000 and credit cash for $1,000. Transaction 2. You purchase some office furniture for $1,500. The entry here is debit furniture for $1,500 and credit cash for $1,500. Transaction 3. Meanwhile, Excel Technologies face an invoice with a value of $500. The entry here is debit cash for $500 and credit Excel Tech or invoice for $500. If you look at all three transactions, you can observe the total credit and total debit are the same. They both add up to $3,000. What documents are used to record entries? In single entry bookkeeping, the income and expenses for the transactions are recorded in a cash register, whereas the double entry system starts with a journal, followed by a ledger, a trial balance, and finally, financial statements. Journal. This is an accounting book where the transactions are recorded sequentially in chronological order. It need not be balanced. Ledger. This is a book of final entries where the transactions are divided and recorded in separate accounts. It must be balanced. Trial balance. This is a bookkeeping worksheet that reflects the credit and debit balance of all ledger accounts. One of the important features of the trial balance is that it maintains the arithmetic accuracy of transactions. Financial statements. These are a collection of summary-level reports that reflect the organization's financial results, position, and cash flow.
So now let's proceed to the characteristics of single entry. So the very heart of the accounting process is the analysis of the dual effect of each transaction in the basic accounting model. So assets is equals to liabilities plus capital. All transactions are normally analyzed and recorded in terms of debits and credits. So the system is called the double entry system of bookkeeping. A system of record keeping in which transactions are not analyzed and recorded in a double entry framework is called a single entry system. Where the records are incomplete, they are said to be maintained on a single entry basis. Under the single entry system, the records maintained are represented by the so-called bare essentials. Normally, the records include a record of cash, accounts receivable, accounts payable, property, plant, and equipment, and taxes paid. The major record under the single entry system is the cash book. The cash book is maintained showing all receipts and disbursements. And because in a single entry, no specific accounts for the receipts and disbursement are debited or credited, only a description thereof is made. With respect to accounts receivable and accounts payable, only a list of customers and creditors is made with their corresponding balances. Now let's talk about the advantages and disadvantages of a single entry system. For the advantages, the main advantage of a single entry system is its absolute simplicity. It requires a minimal number of entries and a low knowledge of accounting standards. This makes it easy for a non-accountant to use. In addition, it can be used to derive profits generated by a business in short order. For the disadvantages, the most significant problems associated with a single entry system include the following. Assets. Assets are not tracked, so it is easier for them to be lost or stolen. Audited financial statements. It is impossible to obtain an audit opinion on the financial results of a business using a single entry system. The information must be converted to a double entry format for an audit to be a possibility. Errors. It is much easier to make clerical errors in a single entry system as opposed to the double entry system, where the debit and credit totals per separate entries to different accounts must match. Liabilities. Liabilities are not tracked, so you need a separate system for determining when they're due per payment and in what amounts. Reporting. There is much less information available upon which to construct the financial position of a business, so management may not be fully aware of the performance of the firm. Single entry method for determining net income or loss. The computation procedure followed in determining net income or loss is simply to compare the capital or retained earnings at the beginning of the year and capital or retained earnings at the end of the same year after taking into consideration withdrawals or dividends and additional investments. The difference between net income or net loss. Any increases in capital or retained earnings is net income, and any decrease in capital or retained earnings is net loss. The single entry method of determining net income or loss is also known as the net assets approach or capital maintenance approach. Now we have here the formula for proprietorship or partnership. Capital end of the year, add withdrawals, and then we get total. Less capital beginning of the year and additional investments, we have the net income or net loss. For the formula for corporation, we have retained earnings and add dividends declared or paid and other items that decrease retained earnings but not profit or loss. And then you have the total, less retained earnings beginning and other items that increase retained earnings but not profit or loss. So you have the net income or net loss.
Preparation of financial statements from single entry records. The preparation of the income statement involves the computation of individual revenue and expense balances by reference to the cash receipts and disbursements and the changes in assets and liabilities. So, the formulas used in converting cash basis to accrual basis of accounting are useful in this case. These formulas involve the computation of sales, purchases, income other than sales, and expenses in general. The preparation of the statement of financial position involves inventorying, counting, and verification procedures to determine the nature and amount of most of the assets and liabilities. So yun, as part of the preparation, kailangan i-identify yung nature and kung magkano ba yung assets and liabilities na ira-record by the proper inventorying and verification processes. So here are some of the examples. First example, cash could be determined by count and by examining bank statements. So, in the means of counting and by examining bank statements, ma-identify natin kung magkano ba yung cash na ire-record. Then second, accounts receivable and notes receivable could be summarized from unpaid sales invoices and promissory notes. Third, merchandise on hand, supplies, and other inventories could be counted and their cost determined from purchase invoices. Fourth example, the cost of property, plant, and equipment could be established by reference to deeds of sale and other documents evidencing ownership of title. Then fifth example, accounts payable and notes payable could be determined from purchase invoices, memoranda, correspondence, and even consultation with creditors. And lastly, ownership equity or capital would be the difference between the value assigned to assets and liabilities. For the first illustration, Negros store provided the following data obtained from the single entry records for the current year. For December 31, cash 890,000, notes receivable 600,000, accounts receivable 1 million, merchandise inventory 500,000, equipment 550,000, notes payable 250,000, accounts payable 500,000, accrued interest payable 20,000, unearned rent income 20,000. For January 1, cash 600,000, notes receivable 200,000, accounts receivable 800,000, merchandise inventory 800,000, equipment 600,000, notes payable 350,000, accounts payable 600,000, accrued interest payable 40,000, and unearned rent income 60,000. The cash book showed the following information. So for the balance for January 1, 600,000 pesos, and the receipts with a total of 2,840,000 includes the following: accounts receivable 1,500,000, notes receivable 500,000, cash sales 400,000, rent income 80,000, sale of equipment costing 100,000 and with carrying amount of 50,000, which is 60,000, and the additional investment of 300,000. So the total of 600,000 plus 2,840,000 is 3,440,000. And for the payments with a total of 2,550,000 includes accounts payable 750,000, notes payable 650,000, cash purchases 300,000, interest expense 50,000, expenses 400,000, equipment 200,000, and withdrawals 200,000. So deduct the total payments, which is amounting to 2,550,000 to 3,440,000. So the total balance as of December 31 is 890,000 pesos. So the following are the supplementary information. Sales discounts granted to customers 50,000, sales returns made by customers 150,000, accounts receivable written off as uncollectible 30,000, and purchase discounts on accounts payable paid, which is 40,000 pesos.
So now let's proceed to the solution. The first step is to determine the capital balance at the beginning and end of the year. The formula is the total assets minus total liabilities equals capital balance. So, kailangan lang natin tandaan dito is the formula para makuha natin yung right answer. The total assets minus total liabilities equals capital balance. So, as we can see here in the table, meron tayong 2 years, which is, ito yung beginning and end of the year, the December 31 and the January 1. So, now, let's focus muna tayo sa December 31 para hindi tayo malito. Ang assets ng December 31 is cash, 890,000, notes receivable is 600,000, accounts receivable is 1 million pesos, merchandise inventory is 500,000, and the equipment is 550,000. Para makuha natin yung total assets, we need to add lang. So, 890,000 plus 600,000 plus 1 million plus 500,000 plus 550,000 is 3,540,000. So, now, let's proceed naman sa liabilities ng December 31. Notes payable, 250,000. Accounts payable, 500,000. Accrued interest payable is 20,000. Unearned rent income is also 20,000. So, same process lang tayo ng gagawin. Pag-a-addin lang natin yung 250,000, 500,000, 20,000, and also 20,000. So, the total liabilities as of December 31 is 790,000 pesos. Ang sabi nga diba sa formula, total assets minus total liabilities equals capital balance. So, para makuha natin yung capital balance, we need to minus the total assets of 3,540,000 and the total liabilities of 790,000. So, kapag kinompute natin to, ang ating capital balance is 2,750,000 pesos. So, makikita nyo naman yung breakdown dito nung January 1. I won't explain na lang din para mas mapabilis tayo, pero same process lang siya. And the capital balance ng January 1 is 1,950,000. Next, the net income may now be computed using the single entry formula for a proprietorship. So, the capital balances natin ng December 31 is 2,750,000, dun niya kinuha. Then, withdrawals of 200,000. Pag pinag-add natin to, ang kakalabasan niya is 2,950,000. So, para daw makuha natin yung net income, kailangan natin i-less yung capital ng January 1 and the additional investment. So, ang capital ng January 1 is 1,950,000 and the additional investment is 300,000. Pag pinag-add natin yung 1,950,000 at yung 300,000 na additional investment, ang total na yun is 2,250,000. So, para makuha ang net income, yung 2,950,000, ilaless daw natin dun sa total ng capital ng January 1 and the additional investment na 2,250,000 yung total. So, pag pinag-minus yun, ang magiging net income natin is 700,000. Thus, the formal income statement must show net income of 700,000 pesos gaya nga ng na-compute natin. So, yun. Next, the following computation are necessary for the preparation of the traditional income statement. So, dito muna tayo sa computation of sales. We have notes receivable nung December 31 is 600,000. Accounts receivable also nung December 31 is 1 million pesos. Collection of accounts receivable is 1,500,000. Collection of notes receivable is 500,000. The sales discount is 50,000. Sales return is 150,000. Accounts written of bad debts is 30,000. So, para makuha natin yung total, add lang ulit tayo with a total of 3,830,000 pesos. Ang sabi dito sa computation of sales, para daw makuha natin yung total sales, kailangan muna nating i-less yung notes receivable nung beginning of the year, which is the January 1. Also, the accounts receivable nung beginning of the year. So, ang notes receivable natin is 200,000 and accounts receivable is 800,000. Pag pinag-add natin yun, meron tayong 1 million pesos. So, para makuha natin yung sales on account, we need to less the 3,830,000 less 1 million. So, magkakaroon tayo ng 2,830,000. So, hindi pa natin kompleto para makuha yung total sales kasi kailangan pa natin i-add yung cash sales na 400,000. So, 2,830,000 plus 400,000 na cash sales. Ang magkakaroon na tayo ng total sales na 230,000 pesos. So, ganun lang yung way ng pagkuha natin sa Computation of Sales. So, let's take a look naman sa Computation of Purchases. We have the notes payable, ito yung end of the year na, December 31, 250,000. Accounts payable, also no December 31, 500,000 pesos. Payment of accounts payable, 750,000. Payment of notes payable, 650,000. Purchase discount is 40,000. So, gaya ng way sa Computation of Sales, we need to add din yung 250,000, 500,000, 750,000, 650,000, and the 40,000. We have the total of 2,190,000 pesos. So, bago natin makuha yung total purchases, kailangan muna natin makuha yung purchase on account. So, bago natin makuha yun, kailangan natin ilas sa total yung notes payable noong January 1 and the accounts payable noong January 1. So, the notes payable on January 1 is 350,000 plus accounts payable noong January 1, 600,000. So, pag pinag-add yung dalawang yun, we have the total of 950,000. So, para makuha yung purchases on account, kailangan natin i-less yung 2,190,000 and 950,000 pesos. So, we have 1,240,000. So, we need also to add the cash purchases para makumpleto na natin yung total purchases. So, yung 1,240,000 plus cash purchases na 300,000, pag-aadin natin, ang total line is 1,540,000 pesos. So, our total purchases is 1,540,000 pesos. So, next, for the computation of interest expense, makikita nyo naman dito sa presentation kung paano ginagawa to. So, the interest paid, we have 50,000 pesos sa amount niya. Then, i-add lang natin yung accrued interest payable nung December 31 na 20,000. So, the total nung interest paid and accrued interest payable nung December 31 is 70,000 pesos. So, bago natin makuha yung interest expense, kailangan ulit natin i-less yung accrued interest payable but nung January 1 na, which is yung 40,000 pesos. So, 70,000 pesos minus 40,000 pesos, we have interest expense of 30,000 pesos. For the computation of the rent income, we have the rent received na 80,000 pesos, then add the unearned rent income nung beginning of the year na 60,000 pesos. So, we have the total of 140,000 pesos. But to complete the computation sa rent income, we need also to less the unearned rent income nung ending of the year. Ayun yung nung December 31 na 20,000 pesos. So, 140,000 pesos minus 20,000 pesos, we have the total rent income na 120,000 pesos.
Computation of gain on sale. Sales price 60,000 less carrying amount of equipment sold 50,000. Gain on sale of equipment 10,000. Add equipment acquired 200,000, total of 800,000. Less equipment December 31, 550,000. Carrying amount of equipment sold 50,000 with a total of 600,000. The total amount for depreciation is 200,000. Negros Store Income Statement for the year ended December 31, 2020. Net sales 3,030,000. Cost of goods sold 1,800,000. Gross income 1,230,000. Other income 130,000. The total income is 1,360,000. Expenses 400,000. Depreciation 200,000. Bad debts is 30,000. Interest expense 30,000. The total expenses is 660,000. Total income less total expenses, the net income is 700,000. Note that the net income is the same as the amount computed under the single entry formula. Note 1 net sales. Sales 3,230,000. Sales discounts 50,000. Sales returns 150,000. The net sales is 3,030,000. Note 2 Cost of goods sold. Merchandise inventory January 1, 800,000. Purchases 1,540,000 less Purchase discounts 40,000. The goods available for sale 2,300,000 less merchandise inventory December 31 500,000. The cost of goods sold is 1,800,000. Note 3 Other income. Rent income 120,000. Gain on sale of equipment 10,000. Total other income 130,000. Negros Store Statement of Financial Position December 31, 2020. Assets, current assets. Cash 890,000. Notes receivable 600,000. Accounts receivable 1 million. Merchandise inventory 500,000. Total current assets 2,990,000. Non-current assets equipment 550,000. The total assets is 3,540,000. Liabilities and equity. Current liabilities. Notes payable 250,000. Accounts payable 500,000. Accrued interest payable 20,000 and earned rent income 20,000. Total liabilities 790,000. Equity. Capital January 1, 1,950,000. Add net income 700,000. Additional investment 300,000. Less withdrawals 200,000. The total equity is 2,750,000. Adding the liabilities and equity amount, the total liabilities and equity is 3,540,000.